Hello and welcome to today's video where we'll be discussing the top 5 investing mistakes that beginner investors often make, and tips for avoiding them. Investing can be a great way to grow your wealth, but it's important to be aware of common pitfalls so you can make informed decisions and reach your financial goals. So, let's dive in. Mistake 1. Not having a plan. One of the most common mistakes made by beginner investors is not having a clear plan for their investments. Without a plan, it's easy to make impulsive decisions or let emotions guide your investment choices. This can lead to poor results and a lack of confidence in your investments. Tip: start by defining your investment goals. Are you saving for retirement, a down payment on a house, a child's education? Once you have a clear understanding of your goals, you can create a plan to reach them. This may involve setting a budget, determining a risk tolerance, and researching different investment options that align with your goals and risk tolerance. Mistake 2. Chasing returns. Another common mistake is chasing returns or trying to time the market. It's understandable to want to invest in something that's performing well and generating high returns, but it's important to remember that past performance is not indicative of future results. Additionally, trying to time the market or move in and out of investments based on short-term fluctuations can lead to missed opportunities and potentially significant losses. Tip: instead of chasing returns, focus on building a diversified portfolio of long-term investments that align with your goals and risk tolerance. This may include a mix of stocks, bonds, and other investment vehicles. A diversified portfolio can help mitigate risk and provide a steady stream of returns over time. Mistake 3. Ignoring diversification. Beginners may also make the mistake of investing all their money into one or two stocks, or even just one sector. This lack of diversification can lead to significant losses if the stock or sector performs poorly. Tip: diversification is key to a successful investment strategy. Consider investing in a mix of different asset classes, such as stocks, bonds, real estate, and commodities. This can help spread out your risk and potentially provide more stable returns over time. Mistake 4. Not staying educated. Investing can be complex, and it's important to stay educated and informed about the markets and your investments. Beginner investors may make the mistake of not keeping up with changes in the market or their investments, leading to missed opportunities or potential losses. Tip: make it a habit to stay informed about the markets and your investments. Read financial news and analysis, attend seminars or workshops, and seek out advice from a financial advisor if necessary. By staying informed, you can make informed decisions and potentially avoid mistakes. Mistake 5. Being too risk-averse. While it's important to understand and manage risk, some beginner investors may be too risk-averse, leading them to miss out on potentially high-reward investments. Being too cautious can limit growth potential and make it more difficult to reach your financial goals. Tip: finding the right balance between risk and reward is key. Consider your investment goals, risk tolerance, and time horizon when making investment decisions. While it's important to be cautious, don't be afraid to take calculated risks if they align with your goals and risk tolerance. Investing can be a great way to grow your wealth, but it's important to avoid common mistakes. By taking the time to create a plan, focusing on diversification, staying informed, and finding the right balance between risk and reward, you can make informed investment decisions and reach your financial goals. Remember, investing is a long-term strategy and patience is key. Don't let impulsive decisions or emotions guide your investments, and always do your research and seek out professional advice if necessary. Thanks for watching. If you found this video helpful, please like, share, and subscribe for more investment tips and advice. We'll see you in the next video.